I'm about to show you a Fibonacci strategy that is so simple, it's almost stupid. But it works nearly every day, even on the most boring days when nothing else is happening. Most traders overcomplicate Fibonacci. They're Fibonacciing every single swing, left or right, every single chop, and they're wondering why it's not working. After 11 years in the market and generating over $11 million of trading profits, I've stripped down Fibonacci to its most powerful essence. This isn't a complex system that only works during high volatile times. This is a bread and butter strategy I developed that helps me find every day good entries with high risk to reward. It's the same approach that has helped me flip my account from $34,000 to over $800,000 in around 90 days. Today I'm breaking down my exact Fibonacci framework, how to set it up, where to enter, where to place your stop losses. By the end of this video, you'll have a repeatable system you can start implementing immediately. All right, what is the golden pocket? The golden pocket is simple and it's only these two exact values in the Fibonacci. If you know how to access your Fibonacci tool, real quick, it's gonna be on your far left tool tab. On your trading view, it's gonna be 1, 2, 3, 4. It's gonna be your third tool down in your trading view, and it's gonna be the first one, Fib retracement. Yours might look a little bit different in this, and I will be adding some to this later. But if you go in your settings, you can adjust this and just copy these two settings for now. 0.618 and 0.66. This is what I call the golden pocket. This is usually after there's an extended move, I'm looking for the retracement. So that is important to know. We're looking for extended moves. We're looking for a move higher or a move lower. If I had to draw it out, it would look something like this, a move higher, which then is followed by a pullback. And this pullback should end up with our golden pocket. And then from there, we can look for an entry to then take the trade higher. I'm just gonna show you exactly how I took this exact trade today, live in front of hundreds of people in my mentorship group using our golden pocket tool. Essentially what this is telling us is like, hey, we are following the trend, and following the trend in trading makes trading just much easier, right? If you're looking for always a reversal, you're looking to fight the trend, it makes trading much, much harder. So I'm looking to follow the trend. I'm not looking to FOMO. I'm not looking to be the sucker that is buying when the price is too high and they're entering at the top. They get stopped out to then later see they were correct, but they missed on a trade because they didn't have the proper entry. Not only that, this gives me minimal risk. This is telling me to buy at a really good price that, hey, even if it goes against me, my risk reward is still really high. Now let me show you how to do it correctly and how to look for the proper trends. I'm gonna show you starting with a trade I took today. So now I fibbed out, I went to my tool and I fibbed out the bottom of the yesterday's low to the all-time highs, which was also the pre-market high. So it's important here, NASDAQ is at all-time highs. The all-time highs, every time you break it, is gonna be a key level. As you can see, we also took out all of these highs right here. It's telling me, hey, this is a nice, strong move, an impulsive move. You see how I'm not fibbing out the chop? You see how the difference between me and other traders are? I'm not looking to fib out this move here in the chop. I'm waiting for price to make an actual extended move. And one of the easiest ways you'll find this is if you draw a box around the choppy price action. Say this is your choppy price action. You wait for price to create a manipulation leg. In this case, was this low. A fake move, as you can say, where traders are being trapped. Short sellers trying to short, get stopped out. There's a V-shaped recovery. People that were long closed because hey, this is going down. This is where they get trapped. So that creates a manipulation low. A low for us to go higher, a low for us to create a nice bullish leg. Then when I want to trade the hey, I know it's really hard to predict manipulation. So what I'm going to look for is to fib out that low to the high, whichever the high was, and look for price to retrace into this. As you can see, price retrace into it one time here for then to go higher. Second time, right at 9:30 New York open, when price is volatile, and then it goes higher. What's important about the Fibonacci, as you can see, you did wick a little bit below the golden pocket, right? And that is fine. What I'm doing with the Fibonacci, I'm waiting for the candle to close. Remember this, and honestly, write it down so you keep it on a notepad somewhere or your computer. That wicks do the damage, but the candles tell the story. Market makers, smart money uses the wick to stop people out. They use the wicks, they use price to come down, stops people, and then it gets bought out. This is why I'm waiting for the candle close. And Also, if this candle had closed below the golden pocket, then I would know it's invalidated and I didn't just long right off of it and get stopped out. So what I did is I waited for the golden pocket to be held, then I jumped, this is a 5-minute golden pocket, and I jumped down to the 1 minute, and on the 1 minute I waited for my first inversion for value gap. If you don't know what inversion for value gap or for value gap, don't worry, I have a video on the channel. After you finish this video, you can go watch that. As soon as that happened, I took my long position right here, and I used my golden pocket as a stop loss. And as you can see, it gives me a really nice tight stop loss, and it gives me added confluence. So a lot of times inversion for value gaps will fail unless you have a golden pocket under it. And then what I target was simply the highs to get taken out all the way up here. As you can see, this gives you 1 to 4 risk reward. Again, it was taken live in front of hundreds of traders. Some other key levels that you need to mark out to fib out your trades are going to be pre-market lows, pre-market highs, weekly highs, weekly lows. And remember to look at the overall trend. Look at the market. Is it bullish or bearish? The overall market is in a bullish trend, right? We're breaking all-time highs. This is why I'm focusing on bullish golden pockets. I'm looking for the moves higher. So I know more than likely market wants to go higher. Let's look at some other examples on how we could use the golden pocket. This is another really good example. Why do I like this? Because you have an extended move higher right here, correct? From this to here. As you can see, we do not retrace our golden pocket, so we missed out on this trade, but it is okay. Because then price, what does it do? It goes sideways. And that's what you have to think about. Extended move higher, sideways price action or a small pullback to another extended move higher, and you fib each leg higher separately. So the new extended leg would have been the lows that would have been within this pre-market overnight session chop to the high of the pre-market, which would have been here around 3 p.m. And what I really love is when you get a 9:30 a.m. manipulation right into the golden pocket and then price V-shapes the opposite direction. That tends to be a really high probability setup. You can see here, 9:30, we get a fake breakout here, right? We broke the highs, quickly we fail, and we manipulate low into fair value gap, lined up with the golden pocket. We take out all of these lows, and what do we get? Quick V-shaped recovery. You get an inversion for value gap as a confirmation entry, and you're off to the races looking for a multiple R trade. Entry here, in this case, you could have had the stop loss under the fair value gap. You could have had a wider stop loss all the way down to the golden pocket you wanted, if you wanted, and you could target a really high risk reward trade here. What I really love about the golden pocket also is that it's so flexible. It can be added to any strategy you trade, and you can implement the golden pocket for a way to look for a higher time frame level on where you should be looking for your lower time frame entry. And if we look at the data of these examples, I'm not looking at nitpicking one trade in each month or talking about the same trades within the same week. It's golden pocket you can use daily, and hundreds of my students use it consistently as a tool to make profits. For fun, we can go back and look at the day before. Right here, we can see price, pre-market, here we get a move higher, we go sideways, next move higher, price traces, right in the golden pocket. Fair value gap there, you also had this previous area of resistance is now turned support, multiple R trade, yet again. Again, I'm just looking at back-to-back days. I'm not here trying to nitpick some secret strategy that works once a year. That overall is just not to make you money. What I really love about the golden pocket is that it can use in any time frame. It can be used whether it's bullish markets, bearish markets. So it doesn't matter what the markets are doing, what the volatility is like, you can always use this tool. If we even just look at some bearish example here, price goes up, sideways, we get a bearish move down to the downside, we fib out that move from the high to the low, it's golden pocket, and then it goes lower. Then we fib out the next move, which would have been this low to this high. Here gives you a bearish move. You would hit ATP1, break even, and then probably would have stopped you out in the green. But the point is that it doesn't matter what the market is. You always find an entry. You always find a good risk reward entry in that. This Fibonacci strategy is stupid simple, but honestly, it is why it works day in and day out. Even on the most normal, boring trading days, like today, the trade that I showed you. If you want to see me trade these Fibonacci strategies live and get personalized feedback every day on your own trades, I recommend you checking out my mentorship program. I work with a small group of dedicated traders that want to get better and don't want to go through the years of painful trial and error. The link is in the description. Thanks for watching, and I'll see you in the next video.